Hey guys, we're gonna start in a bit, in about 2 minutes. I'll just wait for a few more people to come in before we begin today's live analysis. So in the meantime, if you guys want to go through any pairs, any currency pairs or commodity pairs, we can feel free to put it in the chat or the Q&A so that we can go through them. Today's session will be only half an hour, so we are going to limit it to only three or four currencies. Okay, we're just going to wait a little bit more for a few more people to stream in. Okay, I think I'm just going to go ahead with today's session. It's going to be a lot of, we are going to go through a lot of stuff because there are a lot of events coming up later this evening. So today's session will be a live analysis session brought to you by Vantage and Zeta Labs. My name is Sherman, and I'm the R&D lead for Zeta Labs. So I think before we begin, I want to make sure that whatever that we are going through in this session, basically additional information that you can use for your own trading. Do ensure that whatever information that you'll be using are in line with your own trading objectives. And if you do need independent advice, do feel free to reach out so that you fully understand the risk involved. Okay, so same thing, I'm just going to go through some key economic events, where to find these events on the Vantage website, and then we're going to go through some trading ideas, and then I'll leave the end for Q&A. Okay, so the three currencies that I'll be going through, if there are no suggestions by the group, will be the dollar index, euro dollar, as well as gold dollar. Okay. Oops. Okay. So if we go to the Vantage website, on the main page itself, under education and tools, and under market analysis, you can see this economic calendar. These are basically the events that would sort of affect the forex markets and to a certain degree the commodities markets. Okay, so I think the big one this week would be happening in about 4 hours time. So that'll be the FOMC statement. We are looking at a 75 basis point increase or a 100 basis point increase. So later when we are talking about the dollar index, I would cover what I would think would happen if it's a 75 basis point increase versus a 100 basis point increase. So again, if you want to know what's the probability of a 75 basis point or a 100 basis point increase, you can go to cmegroup.com, trading under interest rates, and then basically this website will tell us what's the probability of a 75 basis or 100 basis point increase. So for the 21st of September 2022, 82% probability that it will be a 75 basis point increase from the current 2.5% interest, and then 18%. And basically, as you go along, you can see that if you compare the day-to-day values, you can see that it was, I think 2 days back was 64 and 36%, and now there's a solid 82% for a 75 basis point increase. Okay. So I'm just going to go through the DXY. DXY, I think people, we were expecting a big move later today, but I think there were certain announcements with Russia being a little bit more aggressive. And so I think some of these fundamental events actually affected the dollar pairs, right? So I think if you guys follow the news, this mark here is basically the 20-year high for the dollar index. So we are at an all-time high. We have been on an uptrend since the beginning of June 2021. So this has already been a roughly a 14-month move upwards. So nonetheless, I think dollar index is the dollar is still going to be strong. And if there are external events like a war breaking out between Russia and the US, then you will see that dollar will be favored over the other currencies due to the historical outcomes of war, where US tend to come out victorious. Okay, so I think we do know that this upward move, we have these two high highs, these high lows, and now we're making this higher high. So I think in terms, if you look at the RSI, in terms of the strength, it's relatively similar. So we don't see a slowdown in terms of the dollar strength. So it would be we need to be cautious if you are going to short the dollar at this point. And of course, the best case or best scenario for us right now is to see what's the Fed rate going to be, and then decide once the volatility slow down. Okay, so I was just looking at this dollar index just now, and basically what happened was that at this point in time, this was the announcement of that aggression by Russia, right? And what you can see here is that there is this set of liquidity that's happening here. It didn't take out for at least 3 to 4 hours. And then right now, what we're seeing right now is this 50%. So if you look at this is a 50% bounce up towards the top. And we can argue that this is a higher high as compared to this range here. Whether or not this is a liquidity sweep by the buyers, that's to be determined. So what I mean by that is that what we would expect is that this channel will hold strong till the announcement of the interest rates announcement, right? And then there are two scenarios. One is the 75 basis point increase, and the other one will be the 100 basis point increase. So what's the significance of these two levels? 75 basis point increase, it's most people would say that it has already been factored in by this move upwards. So there might be a short-term relief for the dollar pairs, and dollar might see a weakening. And then the next key event will be the CPI data coming out for September. And if CPI is still at the same rate or at an increased rate, then we will see a more aggressive Fed rate increase in the next FOMC. Whereas if it's 100 basis point announcement, then the market will have factored in this point here, and there will be an increase, because if you look back at the CME tool, we are factoring a 75 basis point increase. So if a 100 basis point increase has been announced, that would be somewhat unexpected, and basically I would expect the price to react aggressively for the dollar. But again, if it's a 1% rate increase, right, that would be somewhat unprecedented, right? And the market might think that this is the last stretch of increase before we see a slowdown in inflation. So the expectation for a 100% basis point move would somewhat be a spike up to the top, and then a violent move down towards the bottom. And again, if we see such a pattern, then we can look for, of course, this is the point where the announcement came in, right? So we want to make sure that the dollar index fall below this point, retest, and then go for a lower low. Okay, but in all scenarios, it would be quite challenging to actually trade tonight's announcement due to all of these additional external events that has happened. Right? Okay, I'm just gonna quickly go through euro dollar as well as gold, and keeping in mind that dollar will be extremely favorable. Market will favor the dollar against all other currencies. For euro dollar, right? We saw the announcement. So same thing, this is the inverse of the dollar index, right? So there's this spike down. And what I was expecting was a sort of a flag pattern creation, right? But there was a sweep of liquidity and comes back down. So one thing to note is that at this point here, on a 4-hour or even on a daily, right? What we can see here is this similar to your dollar index, but in the opposite direction, right? You can see this this very strong trend occurring here, and we can see that this trend, this channel here, has been tested multiple times, right? And this last point here was tested based on the CPI data, right? So it would be highly unlikely that this would form a steady support, right? And you can compare that against multiple occurrence beforehand, right? We hit once here, we hit the top here. This was the support. It broke through, retest, came down again, came down here, test the bottom of the channel, hit the top, come back down. This was our support, right? Again, bounce up, break below this support level, retest, and then goes down further. So if the same pattern were to happen, right? So basically support would not hold, and basically we can expect something like that, a retest, and then goes down again, or retest back to this point and then goes down. Right? But again, euro at 0.99 below the dollar, it's extremely unfavorable for, there's a huge imbalance in terms of the Eurozone versus the US. So again, this might be the last stand for euro to actually hold this level. And for the bullish case, I would say that it has to retest this level, break out, retest, and then goes up again. This would be the low probability trade. I would say the higher probability trade would be that it goes down, retests, and goes down further. Yeah. So if we go down to the 15 minutes again, what happens here is that we do see some rejection of this level. So this level is still a very strong level that so again, what happened here, right? On the 7th of September, right? We tested it multiple times. So this was the support, right? And there was this bunch of buyers that pushed the market upwards, right? So now what we're seeing here is that this zone has been defended again for the time being, right? But it is you can see that it has a weak return, and then it's coming back to retest this. And again, we can see this on the gold later again. And this occurrence happened on a very strong support for gold, and then it breaks below, retest, and goes down. So the high probability trade, I would say, in 4 hours time would be to break below this and then retest. And if it's a 75% basis point increase, I would expect prices to be affected, as in this price level to be factored in for 75 basis point, right? You probably retest here from a higher high, and then we look for the CPI data next month to sort of push it back down to retest this level again. right? So these are kind of the two scenarios that I'll be expecting. This would be a 75, you probably wick below for a 75 basis point increase. And if it's a 1%, 100 basis point increase, I would expect price to break below this support and continue the downtrend. Okay, so this is a 100, and I would say this would be the 75. All right. So far, any questions? Nothing, right? Okay, I'll continue. So this is for euro dollar. So I think it will be similar for every other currency that's paired with dollar. We can go through pound dollar a little bit as well. It's pound dollar is a bit more interesting because of the way that it has already touched this lower end of the channel. So we might see a bounce if it's a 75 basis point increase. And even if it would go down further, the recovery would be much faster because of, if you look at the momentum and strength of this for pound dollar, right? We are at the very end of the channel. Sellers have already been in multiple times, buyers, and they might be exhausted, and buyers might come in to trade these bonds. Okay, for gold, if you guys were here for the last trading live trading session, we saw this support here, which was back in June 2020, right? It came back all the way down, and then we saw this move up again when Russia invaded Ukraine. So this level has been tested multiple times, right? 1, 2, 3, 4, 5, and because of this, we see that sellers were getting more and more impatient. First, they were selling at this level, then now they're selling at this level. Came down to test this, rejected, the bounce off the support again, and then sellers came in at this level for the CPI data. And so you see this break of this this long-term support. So on a lower time frame, right? There's this channel that's nicely created for us, yeah. So again, this let me just mark out the long-term support. Okay, so this is this was the long-term support that I was talking about. This is on the 15 minutes chart. Okay, let me just adjust the curve more accurately. Okay, so this level has been tested multiple times, right? We have seen it being tested 3 times, and now it's the 4th time. So can we actually sell here? Based on the fundamental events that is going to happen soon, and you have this imbalance created from the break of this long-term support, I would say this would be a safer level to sell. So if you were to sell at this level, this might be an aggressive sell at this point in time, because if you were to look at this move up, it's about 108 pips up, right? So if you were to sell at this level, you might risk buyers pushing the price back up to this level where they first entered to play this bounce, right? So buyers at this point in time, right, they're expecting a bounce up, right? When you see this sort of move, these are all your stop losses being executed. Stop losses are basically your market sell orders, right? And your sell orders, or your buyers were all removed from the market. Some of the buyers with further stop losses below, or did not put a stop loss, right? They're still holding on to this drawdown from the buyers here, right? So how the buyers would want to get this position out would be to push price back up to this level and get it out, get these positions out. And what we want to see is a move up to this top and then a violent move down to see all this pending orders closing out your buy orders, right? So some may look at this point here and say this might be a good point to sell, but the risk reward ratio here would be pretty tight. So if we were to look at this level here, right, I would say that at this level here, if you were to take the sell here and your stop loss above this long candle down, right, and your target price would be the next swing low. It's a 1.38 risk reward ratio, right? But if you were to do the sell at this, so where I would put a sell for this candle here will be this on the 15 minutes or on the 5 minutes. 5 minutes will be a little bit more accurate. So we'll be looking for this candle here, the last push up before sellers come in to liquidate them, right? So if you put it on the average price, you can see that the risk reward would be slightly better at 3.36. And so if you were to have these two in place, right, what's the worst that can happen, right? The worst that can happen if you were to enter this 3.36 at this level here is that price you might not get triggered here, right? This might be the bounce downwards, right? And you're left out of the trade. But this risk reward ratio will be better because if you would enter this trade too early, you risk having this drawdown of 100 pips. So this would be I would say this is a high probability trade for the sell. If you're looking for a buy at this point in time, it's a bit tough because of that long-term support that we have already highlighted. So this level here, the last candle down, right? So how can we actually look at a bullish move here, right? The bullish move would probably be this resistance here. You need to break above this resistance. So you probably need to wait for prices to go up, retest, and then go. And again, if you were to attempt this move, then you would probably want to wait and see if prices retest this range here. This range here. So you would have entered, this was the first creation of the support. All these weeks would tell us that there's strong bias here. And then this tells us that there are strong bias here as well. So the next probable buy would be to see if price hits here, react, move up, and you buy, or move up to this level, break down, react to this level. And this will be our first buy for a bullish move. Again, once you have identified the levels that you're going to buy, it becomes easier because, so say for example, on the higher time frame, 4 hours time frame, I know this is the level to buy. What we're trying to look for is a reversal pattern. So say for example, during this period, as prices go down, where would my reversal pattern be, right? So at this point in time, this forms a lower high, lower low, lower high, lower low, comes back here, hits the same high. This is still not the entry. And then this was the high to fight once this bottom has been created. It moves up, breaks above this level, which is a change of character. And basically we look at, you can use a Fibonacci too. Let me just zoom in a little bit. You can use the Fibonacci to identify the 0.786 or be a little bit more aggressive in the golden zone between 0.5 and 0.618. And once you have entered this position, right, the first swing, this is your first TP, and then 2x, 3x will be the move up. And of course, if you're still in this trade, then you would have probably right up to this point. And what would tell us to get out that buy trade would be this move here. So this was the last push upwards. A break below this level here would mean that the uptrend, the sellers are in control right now. Break, we are looking to take profit around here or start a sell at this level. If you measure using the Fibonacci 2 as well, right? You can see the 786 is around here. Okay. So again, here you would see a this would be a little bit too difficult to enter already because of the fact that this was the last high, came down. We are looking for a push up, and because this move up will tell us that this is our support, right? We want prices to come back, retest to move up, but prices didn't enter here. So now we are out of this trade. We probably want to see the same pattern coming back down here, form a pattern like that before it goes up. Again, this is the support level. So we're only interested when price enter this region. Otherwise, anywhere else, basically it's just a whipsaw. Okay, so that's kind of the idea for gold. I can take a look at another pair. We still do have some time. Okay. Aussie dollar is a little bit different from euro dollar and pound dollar, mainly because it has already moved further than it's expected to be. Again, if you compare the RSI or the stochastic, you can see that your strength is weakening, right? The bearish trend is weakening, and we are looking for a bullish reversal. So what would happen here? Again, it broke this support here without a. So what happens here is that when we see a pattern like that, right, with no big candles causing a flush down of the buyers, right? It means that this is just a normal exchange of buyers and sellers coming into this flow here, right? If there are a lot of buyers coming in here and sellers overwhelm them, what we want to see is a big push down to the bottom. But that's not what we're saying. So I would say that this is a form of accumulation, right? And what we can see later on, what we want to see is so this wick here caused a V shape on the 15 minutes, which is a good sign for your bullish move. But ultimately, I think this last push down to this that caused this, right? So this push down to cause this, the lowest point here, has to be taken out. So there are a lot of sellers here. If buyers can push above this level, retest, then you can start seeing a bullish move. Yeah, and again, this whole level here, this sort of trend, you're basically looking at sellers coming in at this point, at multiple points, right? And so if you can break past this level, if buyers were able to break past this level, this candle has to be above this level has to be a solid candle, big solid white candle, to show that your sellers are being liquidated and getting out of the market. Wait for it to retest and push it up higher. And people are putting their stop losses at these levels. So for sellers, there are two things, right? So if there are sellers here and they put their stop losses at these levels, right? When prices come up to this point, you cause them to be pushed out of the market. That's one way in which you can get the sellers out of the market. The other way is that sellers have already taken profit, so they're already out of this market. They might look to re-enter, but we do know that at these price points, the sellers are out of the market. So if buyers are able to push past this resistance, then we can see a strong bullish move up for Aussie dollar. And again, what will be our target? On the 4-hour, we can see a really tough battle for Aussie dollar because of this point here, the CPI data, right? Last week. So we would really want to see price move at least up to 100% retracement, accumulate, and then push up again. That's for the bullish case. Otherwise, I would say 50%, and then we might look at another leg down or a double bottom before we move up again. This would be a better move for buyers because of the target that you is a much easier target to reach before moving up. And of course, this is if there are no external events happening, like a war breaking out between US and Russia. Okay, so I think that basically sum up I think across all currencies, the dollar currency is basically the one which is the main focus right now for everyone. This dollar index at this point is really super high. So I think a lot of us are waiting for the relief retracement back down. This is on the 5 minutes, but if you look at the daily, it's way past it's just making high highs every other week or every other month, right? Just keep making high highs, and then you may even see this move here. Okay, so I think that's about it. Do you guys have any questions, or do you guys want me to go through another pair? Because I would say if it's a dollar pair, it's gonna be the same. The dollar index would be the main thing to focus on, and then every other pair will actually follow that the dollar index. Okay, can we look at pound yen? What are your thoughts on? So a yen pair, okay, yen pair. So I think there's another one for dollar yen. Let's look at yen pair first. Oops, that's a lot of drawing. Yep. So I think the yen play was the yen is probably not in play right now. I think the dollar is still the main focus, but yen has weakened. If you look at GXX, right, yen is, I mean, they're still keeping the interest negative, so it's definitely going to depreciate against all the currencies who are trying to raise interest rates to combat inflation. So if you look at the yen pair right now, right, I wouldn't say that yen will have a say in this this move up. It would largely be based on whether or not the Bank of England is going to increase the interest rates. But just based off this, I think it's very much a range from here. It's a very big range. So only sells here and only buys here, right? And then of course you can zoom in. Right now we are on this leg down. We know that this is basically the sell zone. We're on the leg down. If you want to scalp any trades, right? Yeah, I would say the same channel right down here. And then if you're going to scalp on the 15 minutes, these are the zones that you want to look at. Yeah. So again, I think let me just go through like one method that that's really good in. So it basically uses your Fibonacci to determine sort of like a trading strategy. So for example, when you look at the trend here, right, you see that it's forming this pattern here, right? So you expect the pattern to be this way. This is your lower high, this is your lower low, this is your lower high, and then you want to form a lower low, right? So whenever it touches this point in time, this upper channel that you have defined, it can be, you know, at this point it can be further down. It doesn't really matter. It's going to be a few pips difference, but the move is going to be a swing. So a few pips wouldn't make any difference. So what happens is that most of us will actually sell here, right? So if let's say it comes back up here, I would sell this, basically go down. And what I'm saying here is that there's this push up to the upside, and then sellers came in to push it down. So this is where buyers want to get out again. So there are two confluence, one on the trend channel that's going down, and one based on this move down. So this big move down. So this is where buyers will first got in, and this is where the level where they will get out. So when they get out, it's basically they're basically creating sell orders, and they will push prices down together with the sellers. So what happens if it breaks out, right? If it breaks out, there's one strategy that you can use. It's basically looking at this price move up. Okay, you know that together with all the buyers here and you as a seller, you're coming in to sell here, right? What if prices move upwards? what's the next best way to get out of your position. So instead of buyers being trapped, now you as a seller, you're going to be trapped, right? So what we can do is we can use the Fibonacci tool, right, and look at the retracement of this level. So basically what I'm trying to do is that if this breakout is substantial, right? If the buyers here do in fact find that at this high price, they find that it's a discount and they want to push prices up higher, right? This red arrow here will form the order block, similar to this candle here when the buyers were trying to push prices up. So you can use the Fibonacci tool, right? Raise it to a point where the 0.786 coincides with the breakout, right? Because if that's the pattern, what you see is basically prices go up, buyers coming back down to get a bigger order and then move the price up, right? So at the 0% here, this is where your second order can enter, right? And again, this would coincide with that move up. You can enter your second order here, and by the time it reaches 0.5, you're at break even, right? And then it comes down to this point, you're basically in profit. So this is one of the ways that you can actually use to get out of a position, a failed position, by finding out where's the next point in which sellers will enter or buyers taking profit to push the price back down and bring it up again. Okay, I'm not sure if that makes sense, but let me just give you another example. So for example, let's use this example here, right? So if this is, if let's say I'm going to trade on the 15 minutes, I'm going to scalp, right? So let's say I've drawn this. The top doesn't matter because we are going to buy, so it doesn't really matter. This is where we're going to set our TP, right? So sometimes we make more, sometimes we make less, so it doesn't really matter. I'm just going to put it here because it touches multiple points, 1, 2, 3, and then you have this points here. Okay, so at this point in time, buyers wants to move up, right? So you did a buy here. Let's say you did a buy here, and you say, oh, prices went down. Where's the next buy that I can get in? So you use your Fibonacci tool. This was the push up, and it comes down. So I'll take this point here. I'll move till my 0.786 coincides with this level. Okay, so this is basically where I think the sellers would want to come back and take more, take the price down further. So I can highlight this point here, which is also the end of this liquidity graph here. And what I'm expecting is that I'll put a first buy here and a second buy here. And the expectation is that I will close off my position somewhere at this level. Okay. 0.786 can be a little bit too conservative. You can do the 618, which is the golden zone, right? And you put a second buy here, and basically you close off your position at this point in time. Yeah. So you can use this to your advantage when you're basically at a point where you're supposed to buy, you want to buy, but prices broke below, and the next best alternative to close off your buys is to follow the sellers to help the sellers to bring the price back up here to a more premium price and for them to sell. Okay, I'm going to go through dollar yen, and again, because this has a dollar in it, so it's basically the same as what we're seeing for okay, dollar yen is highly correlated with dollar index. So whatever that we mentioned in dollar for the dollar index applies for dollar yen. Just that dollar yen might move a little bit more aggressive because yen is basically very weak at this point, right? So again, I think we want to look at the momentum, right? So momentum for this move here, they're roughly the same. If you look at the length of this versus the length of this, they're basically the same. You form a sort of like a parallelogram, right? So we can say that the strength is similar in terms from May 2022 to July 2022, right? This move up is equivalent to the one from August to now. So we might see the move down to this level, but again, depends largely on fundamentals right now for any dollar pairs. So is it a 75 basis point increase or a 100 basis point increase, right? if it's 100%, 100 basis point increase, what we are looking for is a push further up, right, to form a if it's 100 basis point, I can kind of show you like what I would think would happen. Okay, so you have this this level here, right? So what will happen, right, is it will form something like this. If it's 100 basis point increase, right? You'll form something like, you move up and you'll form this sort of pattern. So you'll form a new trend above, and usually at this point in time, you can look for a short. Once it breaks below, retest, comes up. This is for 100 basis point. I think this is this will be the move, right? You form this new trend. But if it's a 75 basis point, then I would say that you form a sort of like a, if you zoom in a little bit more, right, you can see this. You can see this level here, which is basically liquidity, right? All the sellers are selling here. The sellers here push the price back down. Sellers push the price back down. So you have a lot of stop losses here. So if it's a 75 basis point, the best way for sellers to come in at the best price is, this is your best price. And if you can push up the stop loss to a higher point, basically you're selling even at a more premium price, and then you flood the market with your sell orders, right? So then we can see the continuation of this pattern. A 75 basis point would do something like that till the next CPI data, right? And then we see if it's an increase or decrease. If CPI is growing at a slower rate, then we might see that it's effective, and interest rates increase has been effective, and yes, yen might go down further. But we are seeing at 8.1, 8.3, or even anything above like 6 to 7%, we will see a continuation of the pattern. Again, CPI has to be at 2%. 2% is the target rate for the Federal Reserve. So anything above 2%, they are still going to aggressively increase interest rates. Yeah. So I think if you are bullish on dollar yen, this might not be the best time to buy, right? Even if you are aggressively, if you're aggressive, right, you will wait for the push up to the top, and then retest this. This upper trend line will become the support right now. Before you to retest, and then you buy out again. If it's a 75 basis point and you want to be a bull, you will probably want to wait till it comes down to retest this bottom, the bottom of this channel before buying again. But these are where you want to buy, doesn't mean that you have to sell here. Okay, if you want to scalp it, you might, but it has to break below this liquidity here, break, retest, and then it goes down. Yeah, it'll be dangerous to be a seller, but if you know what you're doing, then yeah, feel free to go ahead. Okay, so I think that's about it for today. We go through a lot of this dollar index and dollar pairs. So hopefully in 4 hours time, you guys can make some good trades of that announcement. Okay, with that, yeah, thank you guys for coming today. I'll see you guys again next in the next session on Friday, I think. All right, thank you.